Ever looked at your mortgage statement and thought, wait, where is all my money actually going? You're not alone. In this video, I'm going to show you exactly how to calculate your mortgage payment in less than 2 minutes, and more importantly, how to know how much of it is actually yours versus the bank's. And don't worry, no boring math, no calculators flying across the room, just a simple method you'll actually remember. Think of your mortgage payment like a layered latte. It looks like one smooth drink, but it's actually made of a few distinct ingredients, each one with its own flavor, cost, and purpose. Get these layers right, and you'll understand your payment better than most first-time homebuyers ever will. So here's your mortgage latte. There are 5 ingredients in every monthly payment: principal, interest, taxes, insurance, association fees, if you have them. Let's break these down one by one, and I'll show you which layer actually builds your equity and which one just disappears into the system. Ingredient 1. Principal, ownership layer. Your principal is the actual money you borrowed, the part that goes toward owning your home, not renting it from the bank. If your home costs $600,000 and you put down $120,000, your principal loan amount is $480,000. Every month, a small piece of your payment chips away at that $480,000. That's your ownership layer growing. Ingredient 2. Interest, bank's profit layer. Now, this is the part nobody loves. Interest is the cost of borrowing money, expressed as a percentage rate. If your rate is 5%, you're paying 5% of that principal every year to the lender. It's how they make money. In the early years of your mortgage, most of your payment goes to interest. As time passes, the balance flips, and more goes to principal. That's why staying in your home longer or making even one extra payment a year can shave years off your mortgage. Ingredient 3. Property taxes, community layer. Next up, property taxes. These are the fees your city or town collects for local services: roads, schools, firefighters, garbage pickup, you name it. Your lender often collects these each month and holds them in an escrow account, so when tax season hits, they pay it for you automatically. Depending on where you live in Canada, this can add hundreds or even thousands to your annual cost of homeownership. Ingredient 4. Insurance, protection layer. There are 2 main types. Homeowners insurance protects your property from disasters like fire, floods, or theft. Mortgage insurance, CMHC, protects the lender, not you, if you put down less than 20%. Yes, it's one of those expenses that sounds optional, but isn't. Without it, you wouldn't even get approved in most cases. Ingredient 5. Association fees, lifestyle layer. If you're buying a condo or townhome, you might have HOA fees. These cover shared costs, landscaping, snow removal, amenities, and they can range from $50 to over $1,000 a month. If you're house shopping, always check this up front. It's the silent budget killer most people forget about. Putting it all together, the formula. Here's the simple way to calculate your full payment. Mortgage payment equals principal plus interest plus taxes plus insurance plus HOA fees. If you want a shortcut, just use any online mortgage payment calculator, but understand the moving parts before you rely on it. Because calculators tell you the number, but understanding tells you the story behind that number. Value. Add. Practical tip. Try this. Plug in your numbers, then adjust the rate down by 0.5% and see what happens. That small rate change can save you tens of thousands over the life of your loan. Knowledge is leverage. And in real estate, leverage is everything. So next time you look at your pay stub or your bank statement, you'll know exactly where every dollar of your mortgage is going and how to make more of it go toward you, not your lender. If this helped, hit that like button and check out my next video, the 2026 Mortgage Stress Test, Why Most Canadians Will Be Denied. That's where we dive deeper into how lenders actually calculate whether you even qualify for this payment.